Welcome back to the Milwaukee Market Update. We're covering real estate news and data and breaking it down to help you understand how it impacts your real estate decisions. Teaser, will 2024 be the start of a buyer's real estate market?
A couple things to take away from this episode. Interest rates, what's going on with them, what's happening, and where are they going? Will seasonality present one of the best buying opportunities in Milwaukee? New listings continue to increase, and so do months of supply. And also, is Lake Michigan the most Instagrammable place in the United States?
I think so. We're here to give you the info you need to make the right decisions regarding your real estate. Should I buy a home now? Should I be selling? Is the housing market about to crash? Are these headlines I'm reading, content I'm seeing on social media even true or relevant to me? If you're new to the show or returning because you found value in our previous videos, it would mean the world to us if you would please take a second to subscribe. You can follow us on TyAsh31 and Nick Harrington 28 and reach out via MilwaukeeMarketUpdate.com. That's our site. You can go find the podcast there anytime.
Yeah.
I'm Ty Ash.
I'm Nick Harrington.
With Houseworks Collective at Compass, your local real estate experts. Roll into some quick tips here. Looks like you got a buyer tip for this month.
It's wintertime. Gets cold here in Milwaukee.
Sure.
People kind of slow down, don't want to go outside as much. And kind of as the weather cools down here, the housing market kind of cools down a bit too. And we're going to talk more about the stats and what that means. As a buyer, typically what I see in the wintertime, though, is that prices tend to soften. Competition tends to decrease a bit as well, too. So if you're someone that's maybe been considering making a move, if you're okay, maybe packing boxes up in a couple feet of snow as we get here in the winter, might be a decent time for you to maybe save a couple grand on your purchase price as compared to the spring or summertime.
Yeah, totally agree. We've definitely seen that in like the percent over asking. Sometimes that month of supply peaks up a little bit. Definitely a good tip there.
Thank you.
For the, of course, man. For the homeowners out there.
Yeah.
Going through a little bit of this myself. So we've all been there. We move into a home. We start unpacking boxes. We don't unpack all of them. You have a couple coats you bring along with you. Well, then you move 2.5 years later, like myself, and you have some stuff that never left that box. Here's a reminder, too. This is a great time of the year to look at stuff like your coats, your gloves, things you just don't need anymore. There's a lot of coats and glove drives. Just like you just said, it gets cold out here, and there's a big need for those items. Find a way to remove a couple of those boxes that you don't have to move again, because we literally moved stuff for the third time that we did not need to.
Yeah.
So do some of that decluttering now.
Nice. Love it.
Otherwise, on the investor front, specifically house hackers, I just wanted to go through kind of like my 3 main steps of when we're looking at a house hack deal, which is buy a duplex, for example, live in one side, rent out the other. I think there's a lot of like old content out there, and sometimes it's like, hey, buy a duplex and you'll live for free. Somebody else will pay your entire mortgage. Pretty difficult to do that these days. So here's my like quick 3 steps on what to look in a house hack. Step 1. You want to be comfortable living in and want to live in that location for at least a year to meet that owner occupancy requirement. Step 2, we want you to essentially be paying less out of pocket after collecting rent from that other unit on your mortgage, less than what it would cost for you to actually rent a very similar unit. So if you're buying a 2-bedroom, 1-bath on each side duplex, and that rents for $1,200 here in Milwaukee, we're trying to make your house hack number be less than that amount. And step 3, when we move out, how close can we get that to essentially break even after accounting for maintenance, repairs, capital expenditures, vacancy, and if possible, management as well, because you might want to relocate and leave. However, if you're willing to put some of that sweat equity in, we'll see that over year 1 through 5, your cash flow will grow over time. So those are like 3 steps that I like to run people through on their house hack. I think that's going to be more and more important as we keep having lower inventory levels, higher interest rates. Are how can I buy a house and start building equity without just buying a single family and living in it all by myself?
Yeah, I'm with you. And that's the same exact criteria that I use to when I'm working with buyers that want a house hack, almost like verbatim what I say.
Yeah.
I think with rates where they are, it's getting harder to fit all 3 of those numbers.
Yeah.
But I think about, too, the alternative to house hacking is either renting or buying a single family home.
Yep.
And if you're able to reduce your cost of living through house hacking, you're already up. You're also going to be building more in equity versus a single family home because you have someone else that's paying half of your mortgage, maybe more, typically 2.
Yeah.
So I think it's still important to think long-term picture with house hacking, where if it's doing 2 of those things, it's typically going to be a decent investment short term for you. And then as rents hopefully increase, cash flow hopefully will be there as well too when you move out.
Totally agree. You got one more?
Yeah. For investors, to me, the single biggest indicator that I see from an investor that says, I want to start investing, maybe they listen to this podcast, maybe they listen to another podcast that's maybe more inspiring than this one, which there aren't many out there. But the people that go from, I want to invest, I've never done a deal, but I know I want to the ones that actually invest in real estate, all it comes down to is someone that does a deal analysis a day. Yeah. That's it. That's like the key indicator right there of someone that gets that deal under contract versus goes, I'm not ready.
Yeah.
Maybe it's not one deal a day. Maybe it's an hour a week. Yeah. Maybe it's 5 deals a day. Maybe it's one every other day. Whatever that is all it takes. I mean, obviously there's more, but that is like the one key thing that I see of people that kind of go from yes to no.
Yeah.
It's they have not done enough deal analysis to actually be comfortable with understanding like what does this actually all mean.
And actually having comparisons of I've ran even just 10 deals, and then that 10th one you run after the 9, you're like, this doesn't really seem that good. Like, am I ever going to find a deal? Then you find an outlier.
Yes.
Like, now it's time to move.
There it is. There's the deal.
Yeah. So that's exactly the way you actually get that those steps to get a deal.
Yep.
Next up, let's dive into my favorite part, the Metro MLS stats. Let's get.
I look forward to this every month.
Let's get into the numbers. This is my favorite email of the month when we get this data.
Yeah.
So this is here for the Milwaukee Greater Area, 4 county, obtained through our MLS. Let's just go through each of these new listings. 1,750 homes, up 1.2%. That's 2 months in a row of new listing activity going up, as opposed to the prior 18 months, we had seen those numbers going down. So we got some newness coming to the market. Pending sales, 470, up 32%. That's probably going to be one of the highest times we've seen that, meaning we'll probably be seeing a lot more closed sales coming here in the month of October, November. Closed sales, 1,300 homes, down 21%. Days on market, again, still a teenager, 17 days versus 19 days a year ago, down 2 days. Median sales price, $320,000. That's up 3% versus a year ago. I believe what we had last month was right around $335,000. So like you mentioned, that median sales price is actually going down versus a month ago, winter being one of the best times to buy and get the best price. Average sales price, $385,000, up 2.5%. Percent of original list price received, or that percent over asking, 1.6%. Typically in those summer months, I think this year we peaked right around 4% over asking, now at 1.6%. Inventory of homes available for sale, 2,900 homes, down 2.5% versus a year ago. And finally, month of supply of inventory, 2.2 months versus 1.8 months a year ago. So we're actually seeing inventory climb relative to how many offers, how many homes went under contract last month. Again, balanced market can typically considered 4 months. What's your gut read as we just run through these numbers real quick?
Yeah, couple things that come to mind for me. First off, pending sales are up 30% this month compared to where they were a year ago. Yep. If we did a quick rewind to 30 days ago, when you and I were sitting at this table talking through these stats for last month, we saw new listings pop off compared to where they were a year ago. And so new listings is kind of that beginning indicator. Pending and closed are kind of lagging indicators, where if there's less new listings, there's going to be less closed sales, because for there to be a sale that closes, there has to be a new listing.
Yeah.
So we saw a bunch of new inventory hit the market last month. We're now seeing a bunch of market that's now under contract and pending, and then closed sales are down from where they were a year ago. But you kind of mentioned it, that next month, I'm kind of curious to see, are we going to see some closed sales that are going to be finally back up to where they were a year ago because of all this inventory that's now pending right now? So that's something that's pretty interesting to me, is that we saw a bunch of new inventory hit last month or 2 months ago. This last month, it's kind of maintained relatively flat, I'd say. That's kind of like my big thing, just looking through this right away.
And again, those are people getting accepted offers on their homes. Last month, I think we were right around up 8% to a year ago on new listings, and now we essentially have 3 times that amount of what went under contract. I think what will be interesting, something we mentioned before, is what's the impact of lapping interest rates versus a year ago. And not only that, but we'll talk about it. Interest rates are higher than a year ago. So now everyone's like, ooh, I thought it was going to be 5% by this point in time, and I was going to be the smart guy who timed the market perfectly. I guess it's time to finally just bite the bullet, take the advice that we're hearing on the Milwaukee Market Update, and just if you're a home buyer, pull the trigger. Like, if rates go down in the future, you got the home refinance.
I think a lot about the buyers that I've worked with earlier in the year also, that obviously like interest rates, there's a reason people are nervous about interest rates because it affects every single person that's buying a home today. You know, like it's making it more unaffordable to purchase a home at an 8% interest rate than a 3% interest rate. Yeah, like duh. So there's a reason, and it's okay to be nervous about interest rates. But a lot of the buyers that I worked with earlier in the year that were nervous, that did make that decision to purchase, they've now seen already appreciation in their property. And now if they would have sat and not purchased that home, they probably would be looking at a significantly higher mortgage payment than they would have if they purchased earlier. So obviously we don't have a crystal ball. We can't predict where interest rates are going to go, but like you're always going to have that feeling the further that rates go up and up and up of like, crap, I should have bought months ago. I should have done this. I should have just pulled the trigger to make it happen. Months of supply increasing also. A 24% increase in months of supply from where we were same time last year, which sounds significant. You know, that's 25%, almost like it is a big jump. We're up though 0.4.
Yeah, 0.4.
If I do the math.
Yeah.
In months of supply, so almost a half a month almost of more supply.
Yeah.
So like, but we're still in the same time in a constricted market in terms of what the supply is. Yeah. So it's crazy to think that we've been floating around since 2020 at less than, I think, 4 months of supply. Where this hit the highest amount was right during COVID when everyone kind of was in that panic mode. Basically though, like it was after COVID, excuse me. But either way, this is the amount of inventory. If no inventory hits the market today, how long does it take for these homes all to be sold?
Yeah.
And so the higher this number goes, the more homes that are going to be on the market. I think it's kind of indicative of also the winter time as well. People aren't looking to move typically as much. There's typically less demand in the winter time too.
Yep. And I think the last thing just to go with like the months of supply is usually as inventory gets larger. So again, inventory is actually flat versus a year ago, but the actual demand taking that inventory off the market increased. That pending sales, that's what is lower. So that's what allowed months of supply inventory to increase. Usually as we see inventory increase, more supply means prices go down. This is actually, I think, probably one of the lowest months of median sales price growth we've seen year over year at 3.2%. I think this is what we'll see the next 12 months is not 8 to 10% prices going up year over year, but like a 3 to 5%, something a little bit more modest. But that's something to be pretty excited about if you're buying a home today and you look a year from now and your home's value's gone up 10 to 15,000 here in the Milwaukee area, and maybe having the option to be in the sixes. Like if you're getting an 8% rate today and at the end of next year, which I think a lot of forecasts say that number should be in the sixes for interest rates, you're going to be saving a few $100 a month on your monthly payment if you have that chance to refi. And we're in a really good period right now where we saw the same thing last year, less competition, fewer multiple offer situations as we went to winter months and when there was bad news around interest rates. Usually when there's fear in the market, that's when you should buy, and vice versa. If it feels great, everything's rosy, maybe hesitate a little bit and see what am I not looking at. So yeah, lots of interesting stats here. I think we hit on all of these. Let's pivot over to our two-family space here in the Milwaukee County area, specifically Milwaukee County. We have absorption rate or months of supply at 2.84 versus 1.8 a year ago. So we just talked about how about a half of a month of supply was added to the single family and condo space. We're seeing one entire month of supply being added in the duplex space. What is typically, like we kind of mentioned, as more inventory is available, typically prices start going down. We did not see that. I think last month we actually saw a little bit of a price decline year over year in the two-family space, largely due to what we always talk about, just what's listed out there is a lower price point. Median sales price this year, $192,000 versus $183,000 a year ago, up almost 5%. The current median days on market, 15 days, which is the exact same as last year, also at 15 days. As we remember earlier on in the year, I think we were down to like the fastest we saw in 1 month was like 6 days on market. So good to see a little bit of relief there. I know that you and I talk about all the time, like sometimes the good ones, they're still gone in 3 days.
Definitely. Yeah, it depends also on location too. In Milwaukee, like There's parts of Milwaukee where it's rare for inventory to sit longer than a couple days. There's other areas where it's like 15 to 20 days, pretty standard. I've noticed, I think, a significant increase more anecdotally in what people are wanting their duplexes for. It seems like March, April, the going rate was like, yeah, you can get a good duplex for 130K. And now I'm seeing things listed at 130K that are nowhere near in good condition.
Yeah.
And so it just feels like anecdotally people are wanting a lot more for their duplexes than, in my opinion, what they're worth. But we're also seeing statistically here that the average price point has been going up for duplexes and multifamilies.
Yeah, and to try to use like a bigger data set, we can actually look at the year-to-date versus last year's year-to-date of median sales price, 158K versus 140,000 last year. That's up 12%, as opposed to taking these very small amount of numbers of actual active listings, which I think for last month we had ended with 280 active listings. That's a really small number that you can see these weird swings. So if we're actually looking at more of like a stable, like a more stable, more data points, seeing a lot of appreciation there year over year. So if you buy yourself that, $150,000 duplex, you're feeling pretty good about, you could pretty much cover your sales costs year one, and the next year hopefully you're actually starting to see some profit in addition to whatever cash flow you're finding. Running through sold listings, 110 listings, down 8% to a year ago. Pending, 75, down 40%. And again, usually that's because of whatever we have out there in terms of what's available. New listings flat, 170 listings came new in September. And then, like I just mentioned, 280 listings active as of the end of September, up 2%. So kind of staying stagnant, let's call it. We do see a lot of the time that this duplex inventory will be able to sit longer on the market, because if you have two tenants in place in each of your duplex units, there's no reason that you actually need to sell it.
Yeah.
Like all you have to do is just keep renting it out and just I'll expire it and I'll relist it next year when I can get the price I want to. Versus single family.
Typically there's more of a motivation.
Like I had a client, they bought their house today. We're listing at their house they're moving from today. They're ready to sell, and if that means some price concessions, they will. And to kind of wrap up what we got here on the investment space on rents, again, not a whole lot of change that happens every single month here, but always want to do a check-in. Still sitting right around that $1,100 dollar median. The 75th percentile went up by about $5 or so. Still feeling good about the rents. I think I actually just looked at recently at one of the local zip codes here and saw from 2020. Again, this isn't like a compounded year over year, but the actual from 2020 to this year, rents were up 20% in that zip code.
Wow.
So
what zip code was it?
53206. So, it's definitely an area where there's a lot of investor interest.
Yeah.
Definitely one of those areas I'd say is high return if you know how to manage.
Yep. Yeah.
But let's debrief this. I know we hit a couple things. Local anecdotes. What are the average offers you're seeing on each listing? What's the percent over asking you're seeing? Days before accepted offer, and what are the contracts that win?
Yeah, so I'm still seeing that it's going to depend a lot on the market that you're specifically looking at. Most of my business is in the duplex space, so I'm just going to speak specifically there. There's certain markets like West Dallas, which is incredibly sought after right now, where for duplexes, we're still seeing 5+ offers per duplex. And that's a low amount of offers if it only gets 5. Those offers in West Dallas right now are going 40, 50K over, cash, no inspection. That's literally like, I've worked with some clients that we've wrote on several of them.
Yeah.
But other parts of Milwaukee, outside of West Dallas, I mean, West Dallas is its own city.
Yep.
But like I'm seeing, it just feels like a little slowdown in terms of we're able to now put together offers that are a bit more favorable for the buyer. We're not having to go as far over asking. If we are going over asking, we're not having to be as friendly with our inspections as well, too. We can be a little bit more just a straight up inspection contingency with not to request. So I'm seeing that it's becoming a little bit better from a buyer's perspective. It seems like there's less of this like frantic, granted the good ones still move quick, but that's kind of what I'm seeing right now is that if you're at list price, clean offer, you've got a decent chance in the duplex space right now of getting it at that list price.
Yeah.
Outside of West Dallas.
Yeah. In the single family space, I'm seeing something similar where, again, it always matters by area. But if I kind of like talked about some of the recent examples I have around like the median sales price here around those 300 mark, I'm seeing on average probably anywhere from, we've had some recently accepted that were only one offer. We were the one and we got what we wanted, got around list price. But I've also seen some where they're really great listings, definitely well marketed, well priced, lower than what they should have. And we got 5 offers we competed against. Still got it overall, but that did include, I would say, less when we're at that median price, like a % over asking, but it's almost like a 10 to 20K over asking, which essentially equates to somewhere around like that, like 3 to 8% over asking has been winning. And usually it's happening sometimes on Fridays and Saturdays. I've seen some earlier in the week listings here and there where it's like Tuesday, Wednesday, and they're accepting before the weekend, which sometimes it's nice. It's sometimes nice because then I'm not writing an offer at 10 p.m. on a Saturday.
Yeah.
But
well, we had a listing that went live for a property that we have a partnership joint interest in.
Yeah.
And that was in the market for 3 days.
Yeah.
Didn't make it all the way through the weekend. I think we listed on a Thursday. Decent activity.
Yeah.
But also I've seen that the activity, it feels like that was listed at 220, 215 for a list price, which in Milwaukee is going to be like below that average sale price, but a very comfortable purchase price for like a first time homeowner, or it's a very like a large buying pool at that price range. And we saw some good activity. We had a couple people interested, ended up accepting a decent offer quickly. So like there's still things that are moving quick, still competitive out there as well too.
Yeah, if you're coming into it and you're listing your house at a price and you get that in the first weekend, and maybe they have a little bit of things to sweeten the deal, let's roll.
Yep.
I'm seeing the same thing. There's still a lot of the inspection not to request amounts out there. Some written in appraisal gap coverages as well, which we cover in our home buyer workshop. So there's still some softening out there, but I think it'll be interesting to see, knowing that months of supply actually just peaked up a little bit, up that extra half month of supply. Will we see a little bit more of a balanced market and actually a shift towards a buyer's market in 2024, especially if rates stay higher for longer?
Yeah.
So that'll be definitely interesting to see. Otherwise, let's take a quick pause. What other stats are you looking for more information on? Ask us in the comments below. We'd love to give you our take on what's coming up next in the Milwaukee real estate market.
Yeah.
Let's do some news headlines.
Cool.
Did you get these in? I'm not seeing them.
I got one.
Okay.
You want me to start?
Yeah, let's
all right. So, this is kind of a little fun headline that I saw. All right.
Okay.
This is by a local Milwaukee publication. Lake Michigan is the number 2 most Instagrammable landscape in the United States. Isn't that crazy? Lake Michigan.
So number 2 most Instagrammable.
Yeah.
And it's also the number 1 best source of water. We're blowing up.
Yeah. So put Milwaukee on the map, more Lake Michigan on the map. But yeah, in terms of number of hashtags, Lake Tahoe number 1, Lake Michigan number 2, Clearwater Beach, Superior, Ontario. But we beat out Hawaii.
We beat out Clearwater Beach, huh?
Beat out Clearwater Beach. We beat out Lake Powell. We beat out the Mojave Desert, which is, but I mean, kind of a fun article here to see that Lake Michigan. I think people forget with Milwaukee that there's a literal beach at Milwaukee. There's several beaches, which is crazy. It's a Midwest city. Yeah. The beach that I grew up in Des Moines. Yeah. It wasn't a beach. It was a river that was dammed up where they shoveled in a bunch of sand. It was horrible. It was like mud water.
Yeah.
Lake Michigan, it's beautiful. Yeah. It is gorgeous. And I kind of like that it's so beautiful because a lot of people don't really think about Milwaukee as being that like gorgeous place,
Yeah. But that's my new commute. I moved over to Shorewood.
You get to see it every day.
I take Lake Drive up to the Compass North Shore office in Bayside.
Lake Drive is one of the best roads in Milwaukee to ever go on. If you're ever just like down on yourself, just drive around Lake Drive.
Yeah, for sure. That's like the classic, you have somebody coming to visit Milwaukee for the first time.
Yeah.
Cool, let's go to Bel Air. Let's go to the public market.
Yep.
I'm going to take you just like on a cruise to see the Deer District, and we'll kind of putz up Lake Drive and show you all the fancy homes that we'll probably never buy.
Yeah.
For sure. Well, what else you got?
That was my one local headline I got right here.
Okay.
Got a lot of national topics for us, but nothing else local.
Yeah, I mean, I think we've talked a couple times about some of the new apartment buildings and that kind of stuff popping up. I mean, lots of cranes in the skies, lots of stuff going on from a real estate perspective.
Yep.
The only other thing I know, I think there's a rental property association thing that's going on next Friday. Probably by the time we'll be releasing this next week, it'll be a couple days away. I think that's on Friday the 28th. If you're interested in the rental property association and meeting up with some other real estate investors as well as some of the vendors to support them, you should definitely go check that out. Mm-hmm. How about national news headlines? What do you got?
Yeah, I think I got, 2 or 3 different things I want to talk about here. To me, the big one right now that we have to talk about is interest rates.
Yeah.
Because that is kind of at the forefront of everyone's mind, whether you're buying a home or whether you're selling to eventually buy a house. That is basically, I think, what is top of mind. It's headlines that have controlled the narrative for the entire year. Rates just passed 8%.
Yep.
Mortgage applications are at an all-time low since I think 1995.
Yep.
The Fed meeting today, Powell signals the central bank might hold interest rates steady the next month. I think the 10-year Treasury yield is at like an all-time high. There's actually an interesting snippet that I saw. I found this on Wall Street Bets. I don't know if you ever go on there.
I don't go on there. If it's important, you tell me about it.
It's a phenomenal website. Like it's hilarious. If you have any, but like they're the guys that basically like did the GameStop fiasco.
Okay.
So they posted this snippet. There is this group called Real Estate Venture, and they basically do a bunch of like AWS big data around the real estate market.
Okay.
He's the one that predicted there's going to be that Airbnb bubble that's going to burst when we talked about this like episodes ago too. He's very bearish on the housing market, and it tends to be that anything that he's creating is creating a lot of FUD, a lot of fear, uncertainty, and doubt in the housing market. So whenever I see anything that he creates, I know he's got a hidden bias, a hidden agenda, where I think he's like trying to like crash the real estate market with this news. One thing that's interesting though that he talked about is the 10-year Treasury yield has now eclipsed what he says is the average cap rate for investment properties. So he's basically making the argument that instead of buying an investment property, you're better off just looking at the cap rate. You're better off putting your money in a 10-year Treasury yield, where that yield is now 4.6%, and the average cap rate he has is at 4.5%.
Yeah.
I'd love to hear your thoughts. I got a lot of thoughts about this, but
so there's a lot of things that get correlated essentially to that 10-year Treasury. That's a U.S. Treasury that the United States has never not paid their debts. We just print more money and just pay it off anyway. So it's seen as the most, let's just call it risk-free investment there is out there.
Yep.
So almost every other investment out there is based off of that. Essentially, if you're saying it's a 4.6, there should be a premium to the return you get on anything else you invest on. So example, mortgage-backed securities, which is where we kind of derive our interest rates, we almost always see like a 1.5% to right now we're at like 2.8% spread, because instead of it's the U.S. government that you're investing in a pool of homeowners and the interest rates they get. Now, if you look at like yourself as an investor, okay, let's say you're looking for a cash on cash or some sort of like IRR or a cap rate. You should expect if you're going to put active hours into finding an investment and then maybe being somewhat active in managing the manager of your investment, you should be getting a premium on what you're investing in there. And a lot of times people compare those cap rates to the interest rate you get. Is like, you want to at least have that cap rate, that return, as we compare it to other asset classes. There should be a premium to real estate investing. So I definitely heard a lot of people say it. I think that there might be some cap rates dragging it down, like in the commercial space, because that's where most people use cap rate, is in like 4-family and larger that are like more driven towards investments, as opposed to most duplexes here in the Milwaukee Greater Area are probably owner occupied or small mom and pop that they're like, yeah, I'm just going to buy it and hold it for 30 years. I don't need to be flipping this property every few years.
Yeah. And I think about this, I think you nailed it. Like cap rate to me is one small piece when it comes to investment. And unless you're buying a 5-unit or larger, I don't want to say like you shouldn't care about the cap rate, but you kind of shouldn't care about the cap rate. Yeah. He also says the average cap rate is 4.5% in the U.S. I don't think I've done a deal this year with an investor where they've been anywhere close to a 4% cap rate. It's been like in Milwaukee, if you buy a duplex, you're looking anywhere from like a 7 to a 12% cap rate, just depending on the neighborhood and location and what your return is. Yeah. So to me, it's like for him to say the average investor, it says investor gets from buying a house and renting it out. Like I don't think. I just think this data is very skewed, and he basically like pulled snippets to make it look like it's not worth it to invest in real estate.
Doom scrolling.
Because it also doesn't have like the long-term appreciation effect that you get from real estate, or the fact that someone else is paying down your equity for you. Like there's so many factors in this that to me debunk this in a second. But it's like FUD that gets put out there that's just like, shit, why would I do that? Why wouldn't I just go buy a 10-year Treasury yield bond?
I feel like there's usually so much focus on like year 0, year 1 of your investment purchase, like talking about an investment property. And they're so focused on what's the cash flow that it's potentially going to bring me, because I need to be cash flowing day one. But when you look at, let's use a a $200,000 duplex in our area, pretty close to the median, versus maybe one that's $300,000. Yeah, you might be not cash flowing on that. Maybe you're negative cash flowing $3,000 a year on the better area, potentially nicer $300,000 duplex, but you're cash flowing $3,000 a year on your not as nice duplex. Well, that person made $3,000, but the other investor lost $3,000 in terms of cash flow. But what we know, I actually looked at this today, of two different zip codes. One has a 10% median price growth versus last year. The other one has a 2%. So if I can increase my value of my property by doing nothing by $30K, and in the other area increases by $6K, that's the long-term vision of real estate investing. Is you can't boil it all down to a cash on cash or a cap rate. There's other things in this market. You have to put yourself in a position of financial security and stability to have real estate for 5-10 years to get the full benefits. That's where people miss the ship of, man, I'm like having to cash flow this thing this year. Like it's kind of, everything's breaking on me. And I had 2 months of vacancy instead of one. Why am I doing this? Let's just sell it at a loss. Let's get rid of this. But it's that 10-year. That's when like all the returns come.
I agree, man. Yeah. I agree. I'm with you. That's why whenever I do deals myself or for investors, it's really easy to get super short-sighted and just look at today's cash flow number and go, this cash flow today is not there, which I have a cash flow calculator that I send out. So probably a lot of this is my fault. But then also the Bigger Pockets calculator, why I like that so much is they show that profit if sold at year 5, 10, 20, 30. Yeah. And it's exponential from 5 to 30, because that's actually then when you start to see massive equity gains from rents being paid, when you see the market appreciate over time,
compounding,
increasing, like
increase.
So yeah, I digress there, but
yeah, I don't even know how we even got into that, but I mean, I think it's one of those things, doom scrolling. Like, yeah, clearly, I don't know. Maybe there's 250 idiots every single month here buying duplexes in Milwaukee. Maybe I'm one of those idiots.
Maybe you're the guy. Yeah, you're one of them. You're part of that stat last month, man. Congrats.
Yeah, only time will tell.
Yeah. What's the cap rate on your Shorewood property?
I didn't calculate. It's a house hack.
Less than 4.5, huh?
Yeah, it met my.
It's okay.
It met my 3 rules of house hacking. So who cares?
Yeah, true that.
All I know is that it would cost twice as much if I bought a single family in that neighborhood for me to live there. So
that's what matters.
That's called winning. Next up, we got active inventory nationally speaking, 700,000 homes versus I think it was like 660 what we had last month. So inventory is starting to come up. It's supposed to be that bell curve through the seasonality. And like you just mentioned, we're at essentially the lowest mortgage applications that we've seen for definitely more than the last 2 decades, going back into the 90s. In the Zillow Home Value Index, this is taking the typical home, 35th to the 65th percentile range. Milwaukee, again, still ranked number 2. Home value is going up 8.5%. So comparing that to what we said in our MLS stats for our 4-county area, at I think it was about 3.5% price growth. We're seeing those first-time home buyer kind of price point homes, the typical home, are growing and price is going up faster, which I think that's the negative people need to keep an eye out for is if those prices still go up faster and faster than maybe the suburbs, the higher price points, like eventually they're just going to start meeting the prices of all these more expensive areas. So something to keep an eye out. Then on the Zillow Observed Rent Index, Milwaukee bumped up closer to like I think the top 8 in terms of rents going up at 5.3% versus a year ago. I think what we'll see here, again, usually we've seen anywhere from 2 to 3% rent growth, historically speaking. Milwaukee is one of the best markets in terms of your cash flow going up once you've locked in that long-term debt when you purchase. Otherwise, talking about rents going up, we got some inflation. So came in at 3.7% for total inflation, right on the forecast. So like we always talk about, it's good when we come on forecast. Then it's usually bad if we like significantly beat it or if we significantly fall below whatever their forecast is. Next month, they're forecasting inflation in October to be 3.8%. Doing a little dive here into core inflation, so that's everything excluding food and energy, which tend to be a little bit more variable, sitting at 4.1%. So that core inflation a little bit higher. And we're still just waiting for this. Inside this core inflation, shelter is a major driver. It makes up a third of this entire amount. 7.1% down from 7.2. So are we starting to see a little bit of stabilization there? I don't know.
I don't know yet.
I don't think here in the Milwaukee area, if you had inflation for the Milwaukee area, we might be outpacing a little bit there with the shelter because those rents keep on going up. And probably the biggest headline that's going on this month, like you mentioned, mortgage rates. We're at, as of today, 10/19/2023, 8.03% for an interest rate for a 30-year fixed. You can get slightly better rates there on FHA just because of it being a government subsidized loan. Versus a year prior, I think this is where it's going to become more and more important. We're not too much higher than a year ago, so it's definitely painful to see that interest rates are as high as they are relative to what we've had recently. But knowing that that recency bias is going to continue to be a little bit more in our favor. Where do you think interest rates are going to be next year? Go.
I have a hard time
with all the
seeing,
charts you keep, all the models you're running. What are you seeing?
I have a hard time thinking that interest rates are going to do anything but remain where they are.
Yeah.
And I know that's not a good answer that we want. I just think until something unfortunately breaks with the economy, the Fed's MO has seemed to be to raise rates or keep them as is until something changes. And what they're looking to change, unfortunately, is consumer sentiment. Most importantly, they're looking for unemployment to go up, which sucks. That the Fed right now is trying to do something where basically let's make rates as high as they can to stop inflation, puts a bunch of pressure on the banks, puts a bunch of pressure on us as consumers that are looking to purchase homes. But the whole idea is to slow down the economy. And that's not going to happen until unemployment starts to drop. And we're not seeing that. We're not seeing unemployment go down at all. We're not seeing unemployment go up. We're seeing unemployment remain relatively flat month over month over month. Also reading an article right here that U.S. retailers continue to grow in terms of revenue. So consumers are still spending money also, which it's like this whole effect of raising rates has not done what they've wanted it to do to the level they have. It's done enough to put inflation on par with what they wanted it to be. Sounds like rates are going to be paused for December or for November.
I know.
Sounds like they might go up in December. I'm not expecting a giant relief in rates though until something happens.
I think
pending World War also as well too, which that could be something that could drastically shift economy one way or the other as well, depending on how everything in Israel kind of shakes out and what parties get involved there, which I think that's also on the background of everyone's mind too, is if that happens, what does that mean for our economy and for everyone day to day as well too?
I don't know enough to speak on it, but there's so many negative things going on for sure out there that can create a lot of fear. I think the biggest thing for us to talk about in terms of why we're seeing so much strength and what I've heard other people talk about is, we keep putting pressure on rates going up, but it's about 2/3 of all people own their home, or 2/3 of all families, and 75% of them have a 4% or lower interest rate, I think is what the stat was as of a few months ago. That's like half the population that's not really getting impacted, at least on the homeowner side of rates going up. And on top of that, a lot of those people that own their home locked in lower living costs are probably paying off their credit card debt every single month as well. Rates changing, the only thing it's helping them with is they can go invest in that 10-year treasury and just cash in and just be making better than 0.1% at their bank. Like, there's a good portion of the population right now that's just going to get stronger and stronger because they don't necessarily need to sell. Does that change as people's situations change and they have to upgrade that 3% mortgage to an 8? Sure. But there's a lot of really good long-term fixed debt that there's no adjust rate mortgage. There's no people being concerned getting out of that. Sure, some adjust rate mortgages are out there, but I think we're going to continue to see strength in the consumer, at least the majority of consumers that have the ability to lock in their monthly housing payment and probably are paying down a lot of debt as well because they have lower housing costs. But what's all this mean for buyers? Let it rip.
For buyers, I think the wintertime is always a good time to purchase a home in terms of just looking seasonality at prices, less competition, can maybe get in with a better offer that's better for you, and also maybe at list price. So that's, to me, what that means for buyers. I think that there's no better time to make a decision than now. And if you are someone that needs to buy a home, maybe you need more space, you're relocating, there's always going to be economic headwinds, tailwinds, and the best thing is always to think about your own personal situation, separate all of that from you, understand your budget, understand if you can't afford it, and if it makes sense for your own situation, every single time.
For sure. On the homeowner side, what I would say here is if you're like ready to go, let's get it done right now. Like let's get this done before maybe rates go up a little bit higher next year. However, if we're not going to get it done before the holidays, take a deep breather, take the quick tip, start doing some decluttering, do some home projects, reach out to us. We got some great handyman contractors.
Yep.
Get your place ready to go, because as we look at next year, if it's more of the same and rates are relatively stable, we're going to see that, it's going to continue to be probably more on the side of a seller's market, though it might have a little bit more of a tip towards buyers. But there's more than enough pent-up buyer demand out there, especially if we get any relief on the interest rate. And then as we get into next year, if you bought within the last year, and we saw most of this year, we've seen 8 to 10% appreciation, you've probably cut off, even if you even bought just a year ago, you've probably covered off all your selling expense and everything else, and you're walking away scotch-free in 1 year. That's a pretty good deal, but most likely you bought further out than that. You're probably looking to make some proceeds and move on to the next situation that's best for you. So right now it's kind of hard to be in a tough position if you're a seller. Certainly home buyers, there's some timing that we can try to do based on seasonality. How about investors out there? What can they take from all this?
Thing with investors, I would say, is I'm seeing more inventory in the duplex space. It feels like that's hitting the market. Good inventory as well, too. For investor, the big thing that's going to disrupt you is probably your interest rate is higher, your cash flow is less.
Yeah.
And so that's difficult. And so I think it goes back to what we talked about in terms of, I made this cool chart that shows that, like, if you're in an area that has high appreciation, you're going to have low cash flow.
Yeah.
If you're in an area that has low appreciation, you're going to have high cash flow. And so depending on what your personal goals are and what your situation is and what you're looking to do for the next 3 years, 10 years, and 20 years, it's very important to have an agent that understands that can guide you to understand what parts, what areas, what price range, what condition, all of these factors that play into investing to help you find kind of what that buy box is. And it might be a time to kind of change that buy box if you need to also.
Yeah, you can't look at it all. Like, you just won't be the expert, and you'll be running multiple different deals, and you'll be like, well, this one's good because it's got cash flow, and you're ignoring something that maybe is your goal of, well, I don't even need the cash flow. I like my job. I don't need to get financial independence any sooner. It's really important to understand the why and then find an agent that can get you to that actual property that achieves your goals.
Yep.
Totally agree, but outside that, the fun stuff, what's new?
What is new? Girlfriend's grandparents are coming in town.
Okay, cool.
Yeah, so hanging out with them this weekend. And my girlfriend moved in also.
Whoa, ho, ho.
I know. Big steps here.
Big time. So for the grandparents coming in, are you going to take them to Bel Air?
Yeah, Bel Air.
The
going to public market
and then
driving down Lake Drive.
Perfect.
Yeah.
That's the perfect itinerary.
Okay. We're kind of wondering what to do, so I think we just got it all knocked out right there.
Yeah, exactly. I not early enough to do any of the ice bars or anything like that.
Yeah, no ice bars, but it's also too cold to do anything outside.
What is your favorite thing to take people to when they come to Milwaukee?
Kayaking down the river.
In October?
Not in October, just in general. If
Yeah.
it's the summertime, kayaks are super cheap to rent.
Yep.
There are tons of bars and restaurants on the river, and you could have an entire day just kind of booze cruising, paddling around.
Can rent boats too.
Can rent pontoons.
If you don't like to work.
Yeah, which is sometimes more fun. But that's probably one of the best things to do in the summer.
All right. Very cool.
Not in the winter.
Not in the winter.
No.
Well, what's your favorite winter thing? People
People
aren't going to be able to do that for 6 months, so.
winter bowling,
Okay.
indoor golf.
Yep.
Yeah, those two.
Those two.
Yeah.
All right. Very cool.
Yeah. How about you, man? What have you been up to this last month? You just got back from France.
Got back from France.
Yeah. How was it?
Great trip. That was for the Rugby World Cup. Got to a couple matches. Went with a group of about 30 guys. A few significant others came along as well. So awesome trip. I think most people have been out there to Europe and to France just know it's the most exciting part is just being there. Walking to everything, tons of things to do, eat, good food, and just being with a bigger group is always an interesting experience when you travel. Other than that, we moved, sold our single-family place there in Tosa. Now we're in a new house hack in Shorewood. Kitchen's not done. We have a sink, and that's it. We've got carpet, but no flooring in some portions of it. And we have 1 million boxes. So
sounds nice.
Yeah, so not busy at all. We're
No.
just chilling. But now we're just getting through all that kind of stuff and into hopefully a somewhat slower holiday season to unpack, declutter, donate some of the stuff like all the quick tips that were inspired what we were talking about earlier.
Love
But
it.
very cool, man. Well, with that, if you found value in the information we just covered here in the Milwaukee area, Please subscribe and hit that bell notification so we know, so you know when we post our next market update. Thanks, and we'll be back again next month with your Milwaukee real estate market update.
Bye, guys.